Good evening, everybody. All right, we're in the middle of the holidays. Started out the holidays with kind of a bad day in the market. So we're going to kind of analyze that tonight. What do we do when you have bad days in the market? Well, this is kind of a good illustration of which stocks are acting well or what makes the stock continue to act well uh, even when the market turns on us. So the difference between this kind of movement and this movement was the fact that all the indexes moved below the T-line. There was probably other times during this uptrend that you might see the Dow up and then see the NASDAQ down or vice versa. So the difference is when you see some indexes up, some down, that means there's not any real change of investor sentiment, just shifting of funds. It's when you see all the indexes all doing the same thing, selling off hard. That means there is a change of investor sentiment. And the transportation index, same scenario. Let's see. All right. I haven't even checked the. That's crude oil, not going anywhere. That's gold, not really going anywhere. And this is bad. I've been trading soybeans. Whoops. On the short side, ever since broke this downtrend. Covered a little bit of it today because of the fact that we're starting to move away from the T-line in the oversold area, so a little bit more cautious. Oh, silver, a silver, just flat. And that's not what I want. Wheat, trying to come up, but running into little problems right there. So, all right. So the difference, one of the great benefits of the T-line is when the market is selling off dramatically, we can kind of gauge whether our parameters, which is trading above the T-line, is still intact. So ever, coming out of this J-hook pattern, didn't have any qualms today with holding on to this one because it was trading above the T-line. MYOV. There's your kind of your message, and it's still working well. Somebody pointed out EYG today. Kind of the same scenario. Had your message, then your left-right combo, consolidated back to the T-line. I wouldn't be afraid to be buying this one in positive trading tomorrow. But the steady uptrend is very relaxing or very evident. You don't have to worry about not only the T-line, but look at the 3T line on our COLL. Fry pan bottom, J-hook pattern. You just stay long on this one. And AXSM, same scenario. Out of here, all we have to do now, excuse me, that was dinner. The fact that they're staying above the 3T line is very relevant. So at this point, this is where you can be a lot more selective or a lot more specific. Saying, all right, we're still in an uptrend, but where would be a spot? Tell me I shouldn't be in this position anymore. Or maybe the halfway point of this candle. So at least you have something to put a probability situation. So if you're long I, if it came back down through the lows here, what would it be doing? It would be confirming our indecisive signals up here in the overbought area and bringing you back down below this level. That would be kind of an indication that this was where the sellers were taking control. So if you're long, you've got pretty much a game plan already in place, which is you still need to see it trade positive. If it comes back down through here, you stop out. And MGNX. Whoops, I didn't want to do that. Let's do this. Look at your fry pan bottom with the belt hold, left-right combo. How long do you hold on to this? As long as this stays above the T-line. And crisp, J-hook pattern. You have a dark cloud. You're still above the T-line and you're trading right about the 3T line. So at least this prepares you or makes a decision. I'd probably put a sell stop just below today's low because logic says if it comes down through there, it's probably coming down through the T line. You want to close it out right about at the same area that it topped out before. So when you see something that is starting to show a little bit of visual evidence, the bears might be taking control. This was a nice steady eddy, and how long do you hold on to a 45 degree? Until you see a sell signal to close below the T-line. So if you're long this one, what's the game plan? It better open positive and trade positive. Even if it opens positive and starts trading up, you put your safety stop at today's close, because logic says if it comes down through there, this signal is starting to take effect. NTLA, same scenario. Starting to see a little bit of toppiness here. In this case, nothing real dramatically weak on NTLA, but at least you start thinking, all right, where do I not want to see this trade at all? Probably below the T-line tomorrow. And N or TNAV. So this is where the logic of candlestick analysis is very visually relevant. What's our rule for a fry pan bottom? You stay long until you see a sell signal and a close below the T-line. This one should have been presented today. ANDE. What's our basic rule? This one closed the second time below the T-line. If you stayed in it, you got your stochastic starting to head down. You're starting to see a little bit of toppiness and closing below the T-line. If it opens weaker tomorrow, you close out the position. Now, what is a good factor for if it opens weaker tomorrow? Well, if we wake up tomorrow morning and the pre-market futures are showing the Dow's going to open up down 70 points, that means they aren't heading back up. They're heading down in the market. So anything that looks like it's getting weakness and it's opening weaker, close it out. It means the market's backing off and you've got confirmed sell signal. DVA, same scenario. You've got a little doji right here. Makes it very simple. It better open positive and trade positive to stay in the 45 degree. If it opens lower, what do you got? You got another bearish doji sandwich telling you to get out. If you didn't get out today. And CW8, which way is this one going right now? Remember, we had a nice big belt hold signal. Breakout. Now, which way is it going? So I asked this because obviously it's going sideways. Hasn't closed below the T line. But what direction is it kind of telling us that the signals are confirming? Nothing. So if we don't know what's going on right now, because this could go this way, or this way, I mean, we might as well just be rolling the dice. If this one opened lower tomorrow, if I was still in this, I'd close it out immediately. So what do I need to see tomorrow? I need to see it open positive and trade positive. So what this basically does is prepares us for making a decision quickly. Ironwood was good. Bobble breakout, good. Shooting star, doji, bear left right combo closed just below the T line. If you didn't close this one out today, same parameters. It better open positive and trade positive to stay in it. If it opens lower, or you see the market opening lower and opening lower, you close it out immediately. So this is part of that process of learning not only when to get into a trade, but when you start saying, all right, the probabilities are starting to go against me. It didn't close below the T line, so I know exactly what I need to do on this one. I need to see it open and trade positive. If it opens lower, tells me it's time to be out of that trade. Now, the reason I'm showing this is a lot of people have often messaged me and said, I just don't know when to get out of a trade. Well, the visuals of candlesticks analysis tells you when things are starting to roll over. There's a bearish engulfing signal in DXC. What's the game plan tomorrow? Again, it better open positive and trade positive. If it opens lower, you close out the position. Goss was a good one because of the big belt hold signal, the J-hook pattern. Now look where your bearish engulfing signal occurred. And look where it closed. Right here at this level. Couldn't get out through this level. Now we can sell signal. If this one opens lower tomorrow, you close it out immediately. If this opens positive and starts trading positive, you put your stop right here, because if it opens and trades up and then turns around and heads down, you've probably got a shooting star type signal in the overbought condition after a sell signal. Apps, APPS, same scenario. It better open positive and trade positive to continue your 45 degree. All right, the biggies. This also gives you kind of a clue of what's happening in the overall market. Now, Tesla started trading below the T line with that best friend gap down. Now, it did a little left-right combo. You're getting close to the oversold area. So if I had been short, I saw doji, and then bullish trading, I would have closed it out. That's telling me they aren't selling it off very hard. Can I short this one again? Yeah, if it came back down through this level, that would tell me they failed at the T line and that this is still in effect. Now, things like Roku, which kind of took the wind out of that whole sector, somebody downgraded this one, which is, as a trader, when you saw they were opening lower and then saw it was trading off, you close it out. It's not because it's now become a strong sell. It's because when somebody downgrades something, everybody that's following that analyst or that brokerage firm closes out their position. So that's just a very temporary alteration of the supply. There's lots of stock. Now, when that supply gets eaten up or completely sold off, then you start watching for your buy signals and seeing if you get back into the trend that that the investor sentiment had originally put out there. So, kind of what you're looking at right now is a possibility of a trend channel. Now, that didn't do any good for the other ones, like Zoom. So this is why it's always good to have a safety stop someplace. So this one should have been closed out. Now, is this just sympathy selling? Probably, but we don't know how long it's going to take for the damage to get undone and start back up. All right, thank you, Rigid. And there was another one. Oh, NVIDIA. Same scenario. Especially if you're an option trader. If you start seeing this and you know that it needs to stay in an uptrend above the T-line, when they started selling it off, even if it comes back up, you've lost time. So your option premium probably has disappeared. So you close it out. Take your money and move on to something else. Okay, some of the other biggies. Facebook needs to open positive and trade positive. Apple has kind of lost its steam. And the fact that it did it right here at the same level it topped out before, remember, when everybody sees that you're in an uptrend, then they break that high, more upside. Consolidation. If it came up through this level, everybody would be buying. The fact that they couldn't come up through that level told everybody, oops, they're starting to lose some of their energy. Yes. So we got a bunch here that are starting to show sell signals. Netflix needs to open positive. Labu. There's your bearish left-right combo. There's your first target, possibly your second target back down here to fill the gap. So you're right. So that's all kind of confirming the fact that the markets are selling off, the business is selling off. So we don't know how long this downtrend might take place. It might come back to the 34, might come back to the 50. We don't know. But you usually buy at the open and trade out end of day. You say it must open positive and trade positive to stay in the stock. How do you decide between the two views? Oh, because we know what should happen based upon selling and a close at the T-line. So if this opens lower after bearish Harami, bearish confirmation, and it's at the T-line, the difference is if this market opens lower and this opens lower, it's telling me my sell signals are not confirming by holding the T-line. Close it out. I'm not going to wait to the end of the day knowing that if the selling has occurred, it's the sell signals are starting to take things back down through the T-line. Yes, on a lower open tomorrow on Netflix, it's time to close. A lower open tomorrow on CWH, it's time to close. So sitting right on the T-line gives you that a more clear analysis of what you should be doing. Now, with a doji sitting right on the T-line, that's even added benefit. Because what's our doji rule tell us? The price is going to move in the direction how they open after a doji. So if they open lower tomorrow, what's it telling us? They're probably taking it lower. And if they're taking it lower, what's it telling us about what they did here at the T-line? They didn't hold the T-line. So that's, I'm trying to think of which other ones are right there. DEC or DXC, bearish engulfing. We know if this uptrend's going to continue, it has to open positive and trade positive. If it opens lower, you close out the position. Okay, so some of the when I did do is nugget, but nuggets in a range that you probably don't want to do a whole heck of a lot with. Still kind of still in a sideways mode. All right, so the benefit again of the T-line is you can see kind of a little pattern here. There's a little mini scoop pattern. So when you start seeing this after big message day, it shows you the enthusiasm that was over here and there was profit taking. Now I say enthusiasm because it was here and lots of buying came in. Even though it was a bad candle or a dark candle, all that pretty much told us was they opened it up big and then there was profit taking. Now, the profit taking's over. What do you use? The 34 just seems to work. And it's just one of those that kind of has a good result to it. It's what I would call a secondary support level or indicator. Again, with the 250 being your main ones, the T-line being your trading main one. Would you buy? Yes. Because something happened over here that put a new energy in this stock. But there was profit taking. Now you can see kind of the belt hold type system where the profit taking is over. That means the bulls have stepped in. Same scenario right here on Aqua. Kind of a belt hold system. And remember what happens with these belt hold type situations? You got buyers and sellers, buyers and sellers, buyers and sellers, and bam, all the sellers come out. But then the bulls sop up all that selling and continue to buy, which means there's less sellers in the way. It starts a much stronger uptrend. Maxar, there's your Morningstar signal. What can we kind of assess from this one? The Cassics just hit the oversold area. Wave 1, wave 2. So we've got a Morningstar signal and a close of the T-line. Positive trading from here, breaking this downtrend. What do we expect? Wave 3 being the same magnitude as wave 1. And PBYI, there's your fry pan bottom breakout. You can see the little J hook. And I think after hours it was trading up here. What was it? Aqua? Let's see. Anyway. Oh, what was before Max? Yeah, Aqua. Yeah, so it's trading up a little bit. An ATRS. Observe the obvious. There's your perfect J-hook pattern. Now, when I say your perfect J-hook pattern, you can see what's happening. So you knew where your entry is, probably on positive trading. But the J-hook pattern, look what it did today. The market was off big, and the pattern was still working. This is why I always rather go with a pattern versus just an uptrending stock. There's POS, one of the silver stocks. Another J-hook pattern. Oh, what was it? Yeah, the VIX, or the 2X And then SSRM, another silver stock, also giving you this fry pan bottom, J-hook pattern, little inverted hammer. You could be buying this one. Wow, whose handwriting is this? AMRN. You can see what's setting up. So this is why I tell people to concentrate on specific signals and patterns and learn them very well. But be aware of all the other ones, or at least know them. Because what do we got going on right here? There's our little Morningstar signal. Today was a doji. If this opens positive tomorrow, let's put 2 plus 2 together. If it opens positive tomorrow, what's our doji rule say? It's going to trade positive. If it trades positive, oh, Ed, I forgot to call you today, didn't I? If it trades positive, what do we got going on? A doji sandwich or a McMuffin? We've got a McMuffin. What's that tell us? There's probably more upside. And if there's more upside, what type of pattern can we recognize? Wave 1, J-hook, wave 3. Whoops. There's what we're looking for coming out of a fry pan bottom. That big price move. Domo. Here's where the potential big price moves kick in. And why? Is there a difference between, I don't know, Chuck? Oh, it might just be the symbol. Don't trade the VIX. So, yeah, somebody else probably can answer that better than I can. DVIO. This is your classic pattern. Big fry pan bottom. There's your J-hook pattern right there at the breakout level. Now it looks like it's trying to do another J-hook pattern. So if this one starts trading positive, what's your target? First target, and see what it does here. If it breaks through there, what's your second target? Same magnitude move as this right here. Okay, yep. And Flexion. So what do we got going on here? There's kind of your little fry pan bottom. They break out from here. So I got wave 3 in progress. So even the market was trading off. Look at the patterns. Look at the fry pan bottoms. This is Cliff's doing a little J-hook type pattern after an inverted hammer. Wave 1, fry pan bottom. Where do you think next target's going to be? Wave 3 up here. RKDA. In an uptrend. I don't know why I have this one on here. There's something that I saw. Maybe it was a little bobble breakout, making this your next likely target. SRNE. There's your best friend. There's your consolidation. Now, should you be buying a stock that went from 170 to 350? A lot of people say, I'm going to leave that one alone. Except if we can identify the pattern it's setting up, that means we can now calculate that this wave right here and this wave right here are going to be the same, and that's still a substantial percentage to the upside. So being able to see what is happening as that price moves allows you to have a much higher probability of not buying into something that's racing, but something that's consolidated and now starting the next pattern to the upside. Same scenario on ENPH. You can see the double bottom. You can see the support at the 200. Now you got a little doji sitting right here on the 50 after it came back and hit the T-line. So what would be a good trade? This opens positive tomorrow. You've probably got a bobble breakout J-hook, making this area your next likely target. So the important part of identifying the patterns and what they're setting up allows you to get into positions where the probabilities are much greater that you've got upside. So notice what happened in SFIX today. Traded below the T-line, came back up, which told you they weren't selling it off. Got a double bottom that both bottomed out with Morningstar type signals right on the 50. If it opens positive, where do you think your first likely target is? Maybe only up to here, but at least it puts you in a positive direction so you can see what happens once it gets to that level. Some of the auto parts stores like Ken, bullish engulfing, doji, bullish confirmation. There's your next likely target. GTX. Oops, I don't know why this has such a short start. Another one that broke out, still moving in the right direction as far as auto parts. Now, might not buy this one, but if I can see there's other auto parts that are working well, meaning that sector working well, that makes this a little bit more creditable. But this isn't just one stock in the sector that happens to be going the opposite direction. If you can see a bunch of them move in the right direction, now you've got the capabilities of picking out which stocks or which patterns have the best upside potential. GoGo did a little kicker type signal. Makes this one very simple for an entry. If it opens positive tomorrow, it's confirming your kicker signal as well as telling you the T-line is not acting as resistance. So you can be buying it. You have a very simple trade execution strategy. If it opens positive after a kicker signal, telling you it's confirming the kicker signal and telling you the T-line's not acting as resistance, if you're buying right here and starts trading positive, where do you not want to see it trade at all? Back below the T-line, so that's where you put your stop. If it came back down through there, it would tell you right away that it's not working. There's a scoop pattern on PINC. Flat handle, there's your little scoop, and there's your bullish engulfing signal with the confirmation that the bigger the signal, the more compelling that there's been a change of investor sentiment. You can add your analysis that it's doing a scoop pattern, makes it that much more relevant that this could be a slingshot effect going into wave 3. We looked at this one a while back because of the belt hold and then the bobble breakout. You can see what happened. Was this the buy signal? No, didn't confirm. Buy was over here because now what you have after this signal, you had kind of a bobble breakout. That's when you could have been buying. Now, was this a very strong signal? Not really, but the added relevance to this chart would have been this signal right here, then the bobble breakout telling you they weren't selling it off, but this was all showing some good strong buying, getting you in positions like this where you could be up 25%, 20% very quickly. ADMS, big belt hold, slow curve. Wouldn't be afraid to be buying this one on positive trading tomorrow, ADMS. And AMAG, if this opens positive, what's it giving us? Giving us our bobble breakout. Where do you think the next likely target would be? There's a gap all the way up here. or possibly coming all the way up here. So the reason you want to understand what patterns work the best is because not only do they have a high probability of confirming being in the right trade at the right time, but the follow-through is going to give you much bigger returns, because we know that more than likely this won't be in a slow uptrend. It's probably going to be in the same magnitude movement as this wave. So some of the sells, again, people were asking, should we short Roku today? Well, if it looked like they tried to, or they wanted to support right here on the T line. I'm sorry, on the 50. Means if they start taking it up, yeah, you got a trend channel. Just consider maybe doing a trade to the upside to the T line. On the other hand, because it's the best friend gap down, if they came down through the 50, you probably want to be going short. You're probably heading back into at least this range. And things like CLAC, you can see the pattern setup. Breakdown, consolidation, came back up, failed at the T line and the 50, and started selling off. So what type of pattern can we kind of look for here? Maybe a blue ice failure, at least the bearish J-hook pattern. So this is why when the market gets in a condition like this, we don't know whether it's going to go down or they pop it back up or move sideways. That's why I start looking for, again, the opportunity to scan for not only strong bullish signals, but also strong bearish signals. Because if we don't know which way the overall market is going, we know that on any given day, there's going to be good bullish trades and there's going to be good bearish trades. Now, if we're looking at a market situation like this, yeah, we're probably going to be much heavier to the long side. If we see this trade off, we might now start going more heavy to the short side. But it doesn't in one day. You start closing out some long positions, maybe 2 positions, and then you add 2 shorts, and then if it heads down, you close out another 2 more long positions, add 2 shorts. So by the time you're headed in this direction, now you've probably shifted just naturally over to being heavier on the short side. Okay, so with that, are there any general questions on candlesticks? All right, if not, Jim, go ahead and do the double line. Oops, now Jim, go ahead. All right. And then 3.2 seconds to do the next double line. All right, well, I got to scroll all. Okay. Garmin. This one I would have closed out today. Started getting toppy, and then you did a bearish left-right combo. If you didn't close it out, it has to open positive and trade positive. If it opens lower tomorrow, market opens lower, close out the position. Your semiconductors, yes, they all got whacked today. If you were trading this index, you should have closed it out. Rental Center. Rental Center, you had a shooting star bearish engulfing. Doji gap down. Just need to watch to see what it does at the T line. It's not a great looking chart, but it hasn't confirmed any selling. Pfizer, another left-right combo. Now, just the signal itself is strong. Well, what other factors can you add to it other than your stochastics in the overbought area? Look where it ran out of steam. Right about the same level it ran out of steam before. If I was long and didn't close it out today, you get ready to close it out if it trades below the T-line tomorrow. Kroger, nice fry pan bottom. Stay long. SP, let's see. SPLV, there was nothing there, Maria, I can see. Wouldn't be long or short. Amazon, you can see, observe the obvious. Where did the bearish Harami occur? Right smack dab at the 200. So it needed to open positive and trade positive. Notice how it opened positive a little bit today. When it did that, I would have had a safety stop at the previous day's close. If it came down through there, it's basically confirming that signal. Right now, I wouldn't be long or short Amazon. AVEO, another one. Notice where this ran into a little bit of trouble, right at the 50 and the 200. 80 cents. It better trade a lot. If it opened lower tomorrow, I'd close it out if I was long. Clovis, you did a doji up here in the overbought condition. I'd put a safety stop at yesterday or Friday's close. Logic says if it comes back down through there, your evening star signal's in progress. You can tell they are taking profits at this level. NXTC, still above the T-line, but same scenario. It has to open positive and trade positive. If it starts trading below the T-line, this trajectory now disappears. You don't have any good strength in it. I'd close it out. And GTT, this one has to open positive and trade positive. If it opens lower tomorrow, especially if it came back down through today's low, I'd close out the position because I would anticipate that the scoop type breakout didn't occur. Now it's coming back to test the 50 and the T-line area. Yum. Stay long, but your double doji setup tells you you want to see this open positive tomorrow also. Use the T-line as your stop. Baba, same scenario. Use the T-line already as support today after the bearish Harami doji and after a gap up. So that would have had my stop right here at the low of the doji. So it would have stopped out. Now, at least if I was in cash, I could decide whether I want to get back in or stay out of this trade. AGI, you can stay long, but definitely you want to see this open positive after the doji. Zixi, bearish engulfing. It has to open positive also. NVIDIA, with it trading lower today, we closed out the position. I wouldn't necessarily be going short. Only because you're in an uptrend, and this is probably if you can go short if you want. You just have to watch this level with the anticipation you're going down here. CVIX. You can get ready to buy on positive trading. Oh, I forget which one was the blue ice failure. Oh. Black. A blue ice failure is when they fall through the ice. In this case, it was the 50. They come up, try to find the hole they fell through. They can't find it, drowned. So here's your first target, and then here's your second target with the possibility of wave 1, wave 3 coming down here. So blue ice failure is they fall through a resist or a support level, come up, test the support level, and it fails. Now they go to the next support level. ISNG, you stay long, a little bobble breakout. I'd have a safety stop at today's low. Shouldn't come back to that level. CHD, another one that has to stay above the T-line. I'd put a safety stop at today's low. Apple didn't do too much. If you were long, I would have closed it out today because it failed to get to a new high. You saw another sell signal. If you're long, it has to open positive tomorrow. If it opens lower, close it out. CU, nothing here. Now this is a bearish belt hold. I'd be ready to go short if it comes back down through the 50. That told you they failed. BJ. Nah, that one's not coming up. Chipotle came back up to the top end of its range today. You can be buying this one still because it's a Friday bottom. Notice how it uses the 50 and the T-line as support. Nothing. I wouldn't be long or short this one. That's just not a good chart to be in. If it open and traded flat tomorrow, I'd close it out. You can always buy it if it breaks up through this resistance level, where your probabilities become that much greater that it's going to move. CYTK, bearish left-right combo. If you're long, it has to open positive. If it opens lower after a left-right combo, you close it out immediately. Papa John's, another one that's having trouble getting through the resistance levels. If this, use the T-line as your stop. It shouldn't come back down through that level. It needs to get up through the breakout. Oops, that's not what I wanted. Kroger, try picking bottom. You can stay long on this one. Twitter has to open positive also tomorrow. If it opens lower, that trajectory is gone. Spotify. This one has to open positive. If it opens lower, you couldn't get through this trend. So your doji is going to tell you what to do tomorrow based upon how they open it after a doji. Pilgrim's Pride. Wouldn't be long or short this one right now. If you had stayed long Friday, it had to open positive and trade positive. I wouldn't, this one just doesn't have any direction. I would suspect this one's coming back down to the 50. That's Brunswick. Deere, stay short. Not quite in the oversold area. If I was short, I'd have my safety stop at today's high. You can stay long on this. Make sure your volume is good on this price of stock. But as long as it stays above the T line, you can stay with it. Nothing on CGC. Nothing on TLRY. And nothing on ASB. That shouldn't be right. ACB. Yeah, nothing there either. You're right. American Express. That you could more think about going short on this one. If this is not a good trading stock because of the lack of price movement, but if I was going to do anything, I'd be shorting the weakness. HIN, the only way, if you're long, it has to open positive. If it opens lower, you don't have anything. 3D, nothing there either. I wouldn't be long or short this one. And SLDB. If you've gone long, it has to open positive. If it fails at the T line, close it out. It means it doesn't have any juice left in it. No ZB. Ours. Nothing here. If you had a bearish engulfing and then a close back below the T line, I would have closed it out. If it trades lower, maybe you've got something coming back to the 50, but then you have to decide whether that's a big enough percent return to even want to short it. ANAB. You can stay long, have your safety stop at the T line. Black bought puts on it today with the anticipation that it could head all the way down here. Nothing here either, unless you want to go short. Your evening star signal, your failure at the T line. NTNX, Parrish Arami. If you're long, you put your safety stop just below today's low. Shouldn't come back in that direction. It needs to open positive. DISCA. Stay with it, but look at your inverted hammer shooting star. It has to open positive to stay in it. Go. It's all right. Again, it has to open positive. If it opens lower, failing at the 50 and this level, you don't have any energy in it. JP Morgan. Bearish left-right combo. Don't let it trade below the T line. GSX. This one you can get ready to buy because of the little inverted hammer doji. You can buy this one on strength. T-line as your stop. Nothing on this one. I wouldn't be long or short. That's just a very messy chart. Boom. Should have closed it out today. Should have had your safety stop just below the T-line. But the fact that it closed a big down day after a left-right combo, very stogie sandwich, probably has the prospect of still selling off before they started back up. We did Pilgrim's Pride, nothing there. ZS, you stay long, use the T-line as your stop at this point. Oh yeah, you could do a spread, a bearish spread on Clack. Okay, so I would kind of anticipate we're going to be looking at some more downside just because of the magnitude of that day. Even if it comes back up, I don't think we'll see a big pop day unless something comes out big in the news. I think probably have a few days of consolidation and then see if it starts back up. Okay, with that, everybody have a good evening. We will see you in the chat rooms bright and early tomorrow morning. We'll see you then.